What about bumps in the road? When have you tripped over?
Yeah, well, obviously that aborted sort of, starting the fund in 2015, which was pretty deflating because, I had invested a lot of time and effort into that. Don't sort of fixate on one particular path. I think like when I was younger, I probably thought, sell side, a global investment bank in a kind of trading, structuring role, that was kind of would have been the ultimate sort of career path.
What's worked in your career?
Probably being open to changes of direction and pivoting. If I fixated too much on sort of one path, that probably hasn't worked.
What is success to you?
Yeah, I think
Private markets investments are investors can find some real value. I find the best way to learn is learn from someone who's done it before and given it a go. Hi, I'm Travis Miller, host of Grow Your Wealth podcast. Thanks for joining me here today. On these podcast sessions, we're going to talk through how certain investors have navigated the bumpy road of investing, whether it be through business or investments in general. Thanks for listening today. Welcome back to the Grow Your Wealth podcast. We bring you insightful conversation with industry leaders. I'm your host, Travis Miller, and today we have a very special guest joining us, Simon Petris. Simon holds honours in theoretical physics from Monash and a PhD in mathematics from the University of Melbourne. A chance opportunity from a former professor looking for graduates with mathematics backgrounds kickstarted his banking career at ANZ in Melbourne. Simon's early career included roles at ANZ, Challenger, CBA and Westpac. He started Revolution Asset Management in 2018 to provide institutional and high net worth investors access to private credit portfolios. We'll explore Simon's journey and the key lessons he's learned along the way. So without further waiting, let's dive into our conversation with Simon. Thanks for coming on, Simon.
Thanks for having me.
Now, can you just give us a quick explanation on what possibly theoretical physics and a PhD in mathematics means? I assume it doesn't mean 2 + 2 = 5, right?
No, it's a little bit beyond that, but we're sort of, I think in school and uni sort of, excelled at maths and physics, kind of, modelling and, equations and that sort of thing.
Gotcha.
And it led me to ultimately doing a PhD over 4 years at University of Melbourne, trying to model very, very small sort of nanoparticles, so particles that are smaller than the human eye can see. You have to use a atomic force microscope to see them. So we'd work with chemists and chemical engineers who would do the experiments, and then my group would try and model using sort of differential equations and simulations what they were seeing in the experiments to try and understand and drive forward knowledge in that space better.
I understand. So was there ever a thought you'd be a professor, a lecturer?
Yeah, I think sort of that was an option, and I was reasonably keen on that. I think as I sort of progressed in an academic career, I sort of probably didn't like it quite as much as I thought I would, and it's also quite a hard career because you have to sort of move around all over the world a lot on sort of 2-year contracts and sort of go where the job opportunities happen, and really you sort of give up a little bit of control on sort of where you live, and it's sort of hard on your sort of personal life and relationships. So a few of my friends started to get hired as who were sort of strong maths backgrounds, got hired as quants in banks at like NAB and ANZ, and then ultimately I finished the PhD. I was sort of working as a postdoc, which is like the most sort of junior sort of staff member after that, and I saw an ad and I'd been sort of doing a bit of personal sort of research and going to lectures on stochastic processes and maths, which is kind of how you sort of price options, as you know. So sort of was interested in that, and then saw an opportunity and went for it. And thankfully, I got hired and didn't really need any finance or economics or commerce sort of background. They wanted sort of, more of a maths background.
Yeah, I mean, it's intuitive, right, that you were hired at that period, because it's that pre-GFC. Securitization, structured products, CDOs, CLOs, option pricing. So that's a highly mathematical career path, and that's when it was really taking off.
Yeah, well, I think 2003, I was hired more into the sort of macro sort of FX and rates derivative sort of part of the, the markets team, and there are a lot of like exotic options that had sort of very complicated pricing, and then part of my role was to sort of fix the derivative libraries and all of the sort of the spreadsheets and models that the sales and trading people would use, and I sort of went from like a pretty quiet academic environment into a dealing room floor with more than 100 people, and that was back when people you'd had a separate spot trader for each sort of currency cross, and so it was a very loud sort of noisy environment, but I really enjoyed it and learnt a lot very quickly.
Well, from personal experience, I was at ANZ doing interest rate derivatives, interest rate swaps, and I know the power of the model in that it literally sped up our workplace, right? Like I spent most of my time speaking to clients, but on the pricing aspect, I had to just drive the model, not build the model. And so the quant engine that sat behind that was amazingly powerful, particularly when you start pricing digitals, knockout, knock-ins, all sorts of non-linear payoffs. I can get the power that you would have, effort you would have put into building those libraries out.
Yeah, it's interesting because I think that sort of era was when the demand for that sort of stuff was biggest, and probably, GFC and onwards, I think things became a bit more vanilla and people started to worry more about counterparty risk and all this other sort of stuff.
I don't know if you remember the IAS 39, the accounting standard change that came in for hedge accounting. It's sort of reduced some of the complexity in corporate derivative hedging.
No, I remember that well.
We've jumped ahead a fair bit.
Sure.
So I actually wanted to start with start at the beginning. Like, give us a bit of a summary of your background, family, sort of where you went to school, what interested you as sort of the younger days, and then we can work on what you're up to these days.
So grew up sort of eastern suburbs, Melbourne, Vermont South and Camberwell. Only child. Parents were separated, but spent a lot of time with both of them. Went to Wesley in Melbourne, so parents were both sort of. My mum's an English teacher, dad was a lecturer in physics as well, so kind of very academic sort of background, and they invested a lot of time in me academically, so did pretty well at school.
I'll jump in there. Do you can get your brains from mum or dad? They're obviously both academic.
I think the sort of maths and science side from my dad, but my mum sort of invested a lot on the sort of the English humanities side, and I think I'm a pretty reasonable writer and able to explain concepts pretty well. So I think it's kind of a good combination.
Keep going.
Did pretty well at school. Was loved sport growing up. A lot of like basketball, cricket, AFL, that sort of thing. So it's pretty into that, and gravitated more towards sort of maths and science at uni, and really didn't know what I was going to do exactly, but sort of had a vague idea I might go into academia. But as I sort of got further along in the journey, kind of fell a little bit disillusioned with that sort of career path and was looking for something else. So was thinking about things like, management consulting or investment banking, but not really knowing what that involved or really understanding.
Hey, if you're enjoying this, please subscribe on whatever platform you're using. It helps us build a community. We want to educate investors, and this is what it's all about. So you touched on your the university piece. So what about when you started at ANZ? How did that trajectory get you to where you are today?
Yeah, so was basically part of the quant team, FX and rates, for a couple of years, and had a really great mentor, first boss. His name was Sergey Berezna at ANZ, sort of Russian background, but really he was formerly a professor at University of Melbourne, and sort of advertised for people to come and join him in the quant team. But he invested a lot of time in developing me and explaining all of the sort of the nuances and kind of the academic side, but also the practicalities of sort of trading and sales. And so really had a great 2 years with him. And then I think, I can sort of give you a little bit of credit for my pivot after that was, I think I remember having a couple of beers with you out the back of 525 Collins, and you had a role in your team. I think someone had left or something like that. And it was kind of structured product, structured credit. Hadn't really thought about going for it or too much about it, but you sort of said, may as well throw your hat in the ring. And so I started to look into it a bit more and do a bit of reading, and threw my hat in the ring and was able to move from Melbourne to Sydney with ANZ.
The time was right then too, right, for credit.
Exactly, yeah.
Credit was the superstar.
Yeah, well, it's kind of like at the sort of close to the beginning of that journey leading into the GFC and beyond. But that was a pretty pivotal moment in my career.
And then you jumped from ANZ. What was next?
Yeah, so jumped to Challenger because Challenger was looking to sort of build out their team and capability on the sort of structured credit sort of ABS side, and was lucky enough to sit next to Bob Sahota, my co-founder at Revolution. So that was a great experience. He was more focused on the sort of the corporate LBO side of things, but it was he had a lot of experience from previous roles at PIMCO and AMP and that. So was pretty early in my career. So I was probably a bit green. I sort of had the academic sort of smarts, but was probably sort of finding my feet on the sort of street smarts and sort of trading, investing type of thing. Yeah.
I mean, I won't call Bob a grandfather because he's not that old, right? But he's been in the game for a long period of time, right? So he's definitely one of the more experienced players in the game. So I guess it's pretty nice to be sitting next to him for a while.
Yeah, so that was good. I didn't report to him, but ultimately, like, we stayed in touch, and when the time was right, we reconnected to start Revolution. But I think the interesting thing is, while I was there, sort of Bob introduced Kumar to the firm, and that led to the the formation of Capstream Capital, and I actually sort of wrote the paper and did a lot of the kind of the DD for the investment committee for Capstream. So I kind of very early on saw the power of the sort of the boutique credit fund model, and was sort of pretty fascinated by that. And then I'm also pretty good friends with the guys that started Bentham Asset Management. So I could kind of, that was always in the back of my mind, that was probably what I wanted to do, but it took a little while for it all to come together and for the pieces.
So the entrepreneurship was starting in your Challenger days, because post that you went to Westpac, right? So
it was CBA briefly. Did sort of counterparty credit stuff at CBA, but then Westpac, where I also had another great boss, Jim Fingleton, who probably helped me sort of develop more on the sort of portfolio management, and he ran a 6-person investment team, so that was kind of very formative for me. So I was there for almost 7 years, investing, trading in asset-backed securities, public and private, and domestic and global. So multi-billion-dollar fund sort of within Westpac. So learn a hell of a lot then, and then sort of midway through that, I was sort of getting a bit of itchy feet, and I tried to start a boutique fund in about 2015 with a guy that worked for a US CLO and leverage loan manager, but he's an Aussie guy, but he was looking to come back. And so we sort of worked on that with an advisor for about 13 months. And ultimately, it didn't quite work because he took a job with a larger firm eventually, because he just wanted to get back to Australia. So, but I spent sort of 13 months sort of, going through the process and doing a lot of meetings, and ultimately the advisor that we work with, then we reconnected with him to start Revolution, three years later.
It's brilliant. It's a good background. We're going to jump onto a couple of people influenced you. You sort of mentioned.
I've kind of mentioned
Jim
them.
Fingleton.
So
anyone else in there?
Sergey, and I'd say also Bob is sort of particularly around the sort of I'd never sort of been in a role where raising capital was sort of part of that, and so Bob, great experience and great sort of leadership and mentorship on that front.
I was going to ask that, right? If you were to think if you were to pick sort of one thing you could take away from each of those leaders, starting with your first boss at ANZ, so it sounded like he was sort of a bit of a mentor. Yeah,
he sort of gave me the confidence and to how to apply the technical sort of skills to be much more practical, and kind of also the confidence to kind of look at any sort of transaction or trade and just really break it down and sort of get to the bottom of it. And then I'd say Jim was very influential in just kind of that whole sort of running a fund and running a team and sort of leading and sort of giving you enough sort of room to sort of operate without sort of micromanaging. But and then Bob kind of set the foundations really strong for Revolution. And then the capital raising side is, as you know, is kind of an art form onto itself. It's sort of, you can sort of be the best investor and trader going around, but if you can't sort of explain it and convince, allocators to trust you and give you their capital to invest, then you kind of nowhere. So
it's pretty hard to be a fund manager with no capital.
Well, that's it. Yeah, you got to raise it before you can spend it and invest.
So we go through, okay, this connects in with your mentors, and we've gone through your career in a bit of detail, but could you pick in your life one or two moments when you felt like, geez, that turned the dial? Maybe it was when one of your ex-professors said maybe have a crack at the banking world, but can you think of one or two moments in your life?
Well, I think the decision to sort of go for that role in the team that you were part of at ANZ, so moving from Melbourne to Sydney was pretty pivotal. You know, I sort of went and didn't know the time frame that it would be, but you know, I'm still based in Sydney and not going anywhere from there. So that was pretty pivotal. And then I guess it's sort of, you know, I sort of spent a couple of years as a quant sort of building models and helping sort of traders and structurers. And I kind of didn't really want to, you know, I wanted to sort of be on the other side, you know, doing rather than sort of facilitating. So I think that sort of was pretty pivotal sort of path to where I am now.
Hey guys, I hope you're enjoying this episode. If you want to learn more about alternative assets, there's a book here you can read, How You Grow Your Wealth with Alternative Assets. Now back to the episode. And so I think it takes a lot of courage to jump out of large institutions, right? So you finished your last role as Westpac. I'm sure you're getting paid pretty well, probably getting pretty nice bonuses. And I know you've also got a young family as well. So what gives you the confidence to step out into set up your own business?
Well, I've got to give a lot of credit to my wife, Kerry, sort of really sort of, you know, encouraged me and sort of, you know, really backed me to do that. And, you know, it wasn't sort of, you know, driven by sort of money or sort of, you know, it was sort of a passion and kind of what I wanted to do. And so, yeah, she really gave me the support to do that. And then, you know, I think having the experience, you know, that was going back to 2015 when I tried to sort of start the boutique and it didn't work sort of, but, you know, even after that sort of broke down and I was kind of a bit frustrated. I'd spent 13 months sort of on the side working on this idea, kind of just keep going and just kind of keep plugging away. And then eventually all the pieces sort of came together and that experience was, you know, it was tough at the time, but it was ultimately very valuable for, you know, where I've ended up now.
You wouldn't be the first person to the first roll that ICE doesn't work, right?
Yeah,
you got to
exactly.
keep going.
Yep. You never know.
And I mean, looking at the size of the Revolution business now, right? You're definitely more than on the right track.
Yeah.
But what's the size of the fund at the moment?
So we're up to about 3.4 billion of FUM across, you know, several different funds. But so we're kind of one of the largest sort of players in the private credit market. And
I think not only one of the largest, I think which is really important, you're one of the early movers. You think about when you started, how many private credit funds were in play and people involved in private credit was not many.
Well, I think in 2018, private credit wasn't really a buzzword or a catchword. And even in our minds, we were starting a credit fund and we were just looking for the best, you know, investments to, you know, hit our target return, which is 4 to 5% net above the RBA cash rate. And whether that came from public or private, it wasn't going to sort of, you know, we were sort of open to whatever the mix was going to be, we were going to do it. And then all of a sudden private credit became much more of a buzzword and kind of, you know, it's a pretty big catch-all term. It's sort of anything unlisted, you know, in loan sort of format kind of falls into private credit. So, you know, we've sort of focused on a pretty specific sort of area of the market across you know, LBOs, private ABS, and a little bit of commercial real estate. But, you know, it is a pretty broad term. And I think, you know, we've been part of the whole education process of a lot of the market for that. So.
I think and that's been the critical part because your business started roughly the same time ours did. And I guess this podcast is about that, education. But that's been critical to the growth of the sector. Is that, and more people involved in the sector just increases education, which improves the access to the product as well.
Absolutely.
So it's been critical. Now, but a bit more on a personal level. So when you go to work, what drives you? Like, what motivates you to sort of get up and, you know, put in a good day's work?
Pretty competitive. So I like the, you know, the funds management sort of space where you're sort of, you know, cranking out returns every month, and you can look at your sort of, you know, track record and history. So that's that definitely drives me. And, you know, I think the fact that we're doing it on such a big scale and that we have so many, you know, diverse investors and we're delivering that to all of them. And then, you know, we kind of have to take them on the journey and educate them and get them to trust us. So
Yeah.
that drives me a lot. But yeah, I've always been sort of driven by, the kind of deals and trading, investing has always sort of been, pretty fascinating to me. So
I get that competitive piece. It's sort of fun. Because often with trades, you're in competition.
Mm-hmm.
You got to build the relationship. You got to negotiate terms, and sort of winning those trades when you put in that time and effort. And I get it sort of drives you because you're going hard on the trade for the benefit of your investors, right?
Yeah.
Because you got to allocate the capital. You got to get access to the the higher quality deals, which is not just the best price.
Absolutely. And like, I think, having worked on the kind of the sell side for a big part of my career, that 1 year sort of time frame was sort of, it's probably not what I enjoyed quite as much. It's sort of, now we've got sort of more than 5 years track record on our main fund, and that's kind of, pretty important and pretty meaningful, I guess.
Yeah, I mean, the track record's critical, isn't it? Now, what about some advice? Someone doing a mathematics degree at university, what advice would you give to them?
Yeah, I think
as far as if they wanted to enter financial markets.
Yeah, I think like for me, it was sort of ask lots of questions and kind of just put yourself in position. Like I used to love if I got invited to go for drinks with some of the traders or salespeople afterwards, just kind of hanging around and talking to people, asking questions, sort of networking and sort of going out. And I think I would say don't sort of fixate on one particular path. I think like when I was younger, I probably thought, sell side, a global investment bank in a kind of trading, structuring role, that was kind of would have been the ultimate sort of career path. And in hindsight, that was kind of at the time seemed very desirable, but ultimately I think where I've ended up is a much more satisfying sort of place on the buy side, running, a smaller boutique fund, but, probably took a lot of steps and iterations to kind of get to that point where I knew what I sort of wanted, eventually. Yeah.
I like that first point, mate. Like we would have met 25 years ago, right? But as a young person entering the industry, it is so critical to say yes to the networking events, yes to the catch up, because you'd be amazed the network you build across your career and the subtle relationships you build from just hanging around when you're younger with the more experienced people.
Yeah, no, it's really valuable. So kind of still, obviously a bit busier these days with, work and family sort of commitments, but still try to, make as much time as possible to do that with people that I've known in the markets for a long time.
Yeah, and so the second question on that front, so we've talked about someone coming out of university. Now, what tips would you give from someone looking to leave Westpac in a nice, secure job, jumping out into an entrepreneurial business?
Yeah, it's a tough one because you need to know enough to kind of have a bit of an edge to start a new business, but you also don't want to leave it, too late until you kind of like, got so many commitments that you can't really afford to take the risk. So I think, for me that the timing was perfect because the kids were kind of young in primary school, and if things didn't work, I could sort of felt like I could go back into some sort of a banking role, but it was, it's probably it's tough to sort of give specific advice, but it's sort of maybe don't go too early, but don't go too late. You kind of got to
Well, again, you've making some good points, right? The other point is you can always go back to what you're doing.
Yeah.
Like you don't want to have that sort of parachute in the back of your mind. But if you really get out there and have a crack, like that job you had previously, you can go back to and you'll have more experience.
Yeah, look, maybe you don't quite get as good a job, but you'll get something sort of close. And it's
fair enough. Now, what's worked in your career? What do you reckon you've done well?
I think just probably being, I guess, open to changes of direction and pivoting has worked. True. I think, that if I fixated too much on sort of one path, that probably hasn't worked. And then I think, I'm a pretty good sort of listener and take in a lot of opinions, but ultimately I think, you can sort of absorb them, but ultimately sort of backing your own judgment is kind of, really paid off.
Critical, right? You got to make decisions, right or wrong. Hey, if you're enjoying this, please leave a review. It's really important to us. We're trying to build momentum around education, and better reviews will get more people coming and listening. What about bumps in the road? When have you tripped over?
Yeah, well, obviously that,
Yeah.
the sort of the aborted sort of, starting the fund in 2015, which was pretty deflating because, I had invested a lot of time and effort into that. But as I said, ultimately, a lot of that experience was valuable, and kind of even the relationship with the advisory firm was kind of crucial as well, ultimately to when we started Revolution. So,
Gotcha. Right. What about some tips? Tips for life. What are the 3 tips for a young Simon Petris?
I think
Or an old Simon Petris.
I think just get out there and sort of meet people and talk to people, and I think follow up and sort of maintain relationships. I think don't fixate on one sort of path that you in your mind seems to be ideal, but be prepared to sort of pivot and adapt. Probably a couple of good tips. Yeah.
And what about success? What is success to you? And that can be professionally and personally.
I think I feel reasonably successful. Having built a brand from scratch, and managing a lot of capital, but also taking investors on the journey that we've been on, and I guess delivering on the kind of objectives of the fund. So that's successful. And then from sort of family perspective, just having good relationships, and just being there, being actively involved in kids and partner.
Sounds perfect. Right, how about some quick fire questions?
Sure.
Now, you've talked about your younger days, but what about your first job?
Yeah, I didn't do a lot as a youngster. I sort of was pretty focused on school and playing as much sport as possible. But the first real job I can remember was at Monash Uni. Having studied physics, as you get a bit older, they let you kind of demonstrate practical classes to like the first year students. So I sort of used to have to help people build like circuit sort of models and stuff like that, and I wasn't particularly good at that because I'm not the most practical sort of guy. So I used to struggle to sort of do it myself, and then trying to explain it to people or what they got wrong. But it was pretty good money. I think used to get paid. Good. Yeah.
So that was the
pretty
first.
Well. Yeah, it's kind of the first sort of really sort of meaningful.
First time they let you out of the cupboard.
Yeah,
you had to study.
But no, I found it a little bit stressful, to be honest. It was.
Work's tough.
Yeah.
You learnt to work though after that.
Yeah.
I've asked this one before. Piece of advice for younger self. We'll jump over that one.
Yeah.
But what motivates you most as a person? You mentioned earlier you're competitive, but anything else?
I think just being satisfied with a job well done, and kind of just being ethical and transparent, and kind of being accountable as well. Yeah.
What are your tips for long-term wealth?
I think this is probably some of the mistakes that I've made. I think when you make sort of PA investments and that they go well, you tend to sort of attribute that to your own individual alpha. Whereas it might be kind of the the beta of the market sort of going up, and then when things go bad, you kind of blame the market and blame the beta. So I think accountability and probably I think given what we do, we analyze a lot of transactions in our particular niche area. So I've probably become a bit more open to the idea of outsourcing and giving capital to specialists for certain areas, and then probably come around to the idea in public markets that it's pretty hard to beat indices, particularly in equities. It's a tough game. Like if you didn't own Nvidia and keep adding to it, then the public indices probably torched a lot of active managers, and there's a lot of research around that. So I think the institutional investors that we speak to are kind of getting to that point where public markets it's kind of you save your fees and go passive, and then private markets where you can't really get that index exposure, you kind of do your DD and you allocate your sort of your fee budget towards that.
It's like when I look at public markets, that's roughly how I look to invest, right? Index, because I look at the private markets where you can get some proprietary information, proprietary access into across different asset classes. Becomes an interesting in market where you probably do still have some alpha.
Yeah,
but you're right, in public
And I think you and I both have, a few sort of VC kind of early stage investments, which it's kind of fun and enjoyable, but then probably not so much for you, but for me, I'm conscious that, the deal flow that I see is pretty limited. So I've kind of got more comfortable allocating to funds in that space because, I just don't have the time or the network or the access to all the deal flow to really, to do it properly. So kind of got a bit of a combination of direct and fund investments in that space. But I do enjoy it. It's kind of an interesting kind of hobby to sort of, to follow and be involved in.
Yeah, agree. So when you're not working, how do you like to spend your time? You're not a Collingwood supporter, are you?
I am, yeah. pretty passionate Collingwood supporter. Yeah, my granddad played a few games for Collingwood in the 40s, so it's kind of no real choice. But been lucky enough to go to the grand final a couple of years ago and see them finally win, because I'd seen a number of losing grand finals and a draw. So it's pretty satisfying. But I do enjoy playing a lot of sport growing up. But as you get a bit sort of older and the body kind of lets you down a bit, I'm probably a bit more sort of watching kids play sport, or I do love going to live sport. And
it's great.
Yeah.
Nothing better than watching the kids play sport as well. So frustrating though at times. I used to be so much better.
Got to zip your mouth and not give too much advice.
So other than the sport, anything else? You're not a golfer, are you?
Not a golfer. I haven't done a lot of this lately, but I do enjoy fishing. I used to, before kids, I had a boat, and I really quite like lure fishing. So soft plastic sort of. It's quite satisfying. Doing the jigging and trying to trick the fish into going for the lure. So I think I'd like to get back into that a bit more.
Fair enough. A bit of fun with the last question, but when you look at Revolution Asset Management, who's more important, Bob Sahota or Simon Petris?
Well, it's quite a thorny question. Obviously, Bob is the sort of the CIO and the visionary, but I think I actually am the key person on the AFSL because of the more of the recent sort of Big Four banking experience kind of was a bit was ranked.
It's only having a bit of fun. I know it's two different personalities. So it's a combination of two different personalities that makes it work. Right?
Work well together. I think we sort of present pretty well together. Is kind of the feedback.
For sure.
Different styles and
That's great. Appreciate you coming on.
Okay.
Now, if you're interested in getting in contact with Simon and connect with him on LinkedIn, we'll include the link in the notes. But really appreciate you coming on.
Thanks very much, Rose.
Hey, if you're enjoying this, please leave a review. It's really important to us. We're trying to build momentum around education, and better reviews will get more people coming and listening.